What's going on, guys? This is Matt Marinoff. I'm here with my friend, the protection specialist, Antonio Frattalone, and he is working with a national life group.
No, I'm not working with any company. I can't
Now
say names of companies. Not allowed to. I'm
got
a
it.
broker.
Got it. He's a broker. He's a broker with yellow hair. Apparently, he thinks he's Macaulay Culkin, ladies and gentlemen. So I know Antonio now for a while, and obviously finding out a little bit more about the insurance side of business and finding out what benefits are available. Obviously, there's things that I've never thought about that he's brought to my attention. So I'm curious to see what other individuals out there think about their planning for what's going to happen in the next phase of their life. And they always shouldn't just worry about what's going to happen if, God forbid, something happens to them. They should worry about what happens if, God forbid, something happens to them and they're still here. Me, I tell my wife all the time, God forbid I stroke out, I'm in a wheelchair, push me down the fucking stairs. Anyway, without further ado, we've got the protection specialist, Anthony. Take it away, Antonio.
Yes, sir. Well, thanks for having me on. Everybody else gets like a theme song and like music. You're like dancing and shit when they come on. So I'm like, all right, well, what's going to make people want to watch this boring ass tax guy or this insurance guy?
That's because they bring it.
They bring it? Okay, so you're saying I'm not, I'll beatbox right now, man. If you rap, I'll beatbox. I'll do it. I don't care.
I don't know if I'm really into doing stuff
Come on, man. Make it happen, Captain.
No, go ahead. I think you can do it. I think your hair is throwing me off tonight.
All right, let's get into the tax shelters and the real estate and the insurance. All right.
Yeah, go ahead.
So yeah, last time that we spoke, we did a live. We talked a lot about the living benefits and what we could do to protect the things that matter most to us today, not necessarily for when you pass away, but while you're alive, right? And I think one of the most important things of being a real estate entrepreneur is not just having the ability to earn a lot of money, but making sure that you protect that asset, and that asset is you. So if you make $1 million this year and you can't keep any of it, then what good was it? So I'm going to actually dig a little bit into some of the charitable contribution plans that we offer, that we started talking about before, one of them being the 1031 exchange alternative.
That sounds perfect.
Who's watching right now? Because I can't see nothing. If anybody's watching, if they have a question at any time, just stop me and ask the question, because there's a lot of moving wheels when it comes to this kind of thing.
Absolutely. Go ahead.
All right. So the first thing that we do, if you're a real estate entrepreneur, let's say you have a piece of property and you're going to sell it and do a 1031 exchange, right? Let's say your capital gain tax is $300,000, $400,000. You're doing selling an apartment building, 8 to 10 units, whatever it is, and your gain is 1.4 million, 1.5. You got to pay $400,000 in taxes. So the first thing everybody runs to is going to do a 1031 exchange, because we're kicking the can down the road, right? And we don't want to have to pay those taxes today. Some people don't realize that you have to pay not only the taxes on the gain, but you also have to pay, if you don't do a 1031 exchange, you have to pay all the appreciation or the depreciation that you took over the years. So you're selling a property and you claimed $200,000, $300,000, you got to pay income tax on that, right? And then you have to pay the capital gain. So we do a 1031 exchange to kick the can down the road. But what if you're in a scenario where you don't want to do a like for like? What if you don't want to buy another piece of real estate? Or maybe you don't want to be a landlord anymore? Then what can you do? It's time to pay the piper at that point, right? You have to pay the taxes because they're due. So what we do is we create a platform for you to be able to quick deed that property into. Usually it's like an LLC. And we'll then, after we create the platform, donate 99% of those shares to a charity. So I'll stop there for a second. We're going to take the property. We're going to quick deed it into an LLC that we set up specifically to donate 99% of the shares to a charity. And you get to pick the charity. Why would I do that? Why would I donate 99% of my property to a charity? Well, you're not You're donating 99% of your shares of that LLC. You're donating that to a charity. Woo, my horn is crooked. So the reason that we do that is because now when you sell the property, that charity is not going to have to pay any tax. You keep that 1% controlling member. You're the 1% managing member, and the other shares are just shares. So that liability is transferred over to the charity at that point, and they don't pay taxes. So you do have to pay at least 1% of that gain. Matt, where'd you go, man? All right, so I'll just keep going then. So you're paying 1% of that gain. Unless you want to take management fees as the managing director, you could take 5 or 6% as managing fees. But if you do that, then you have to pay the tax on that percentage, and it basically at that point just becomes another deferred comp plan, and we don't want that. We want to eliminate the taxes, not defer them at this point. So the next step in doing this specific process would be to not only give the charity the asset to put on their sheet, on their spreadsheet, and for them to benefit. How are you going to benefit? How are you going to get your money out? Is usually the next question people ask me. So the way that you get your money out is by taking loans. You're able to take loans tax free.
Guys, I'm sorry. I don't know where Antonio went. Guess we lost him. Antonio, if you can, come on back. Wait for him to click back in. Apologize for that. Trying to find out where he is. Oh, there he is. You there?
There I am.
Yeah, that was strange, right? It froze up or something on my end. But anyway, keep going.
So yeah, I was getting into the process, but then it froze on me, and then it went to your screen, chair, and then I couldn't get back in. So we were talking about the 1031 exchange alternative. First, creating the platform, which normally is an LLC, and then after we create that platform, we quick deed the property into the LLC and donate 99% of the shares to a charity of your choice. So far, do you follow me on that? Or if anybody's watching right now, if you have any questions about that part or why you would do that, why would you
We have a couple of viewers, but there's no questions yet.
Okay. All right. So I mean, it's pretty simple. You donate the 99% of the shares. You keep the 1% that is the managing percent of the LLCs. Have two different types of members, right? Managing members and regular members. So they now own 99% of the shares. So when you do the quick deed and now the assets owned by that that LLC, that charity has those shares on their spreadsheet. So now, what's your tax liability if you sell the property? If you do some quick math, it's 1% because you donated 99% of the shares to a charity.
So why don't most people talk about what you're talking about right now?
Well, most people don't know that it exists. Number one, most CPAs think that when we talk about charitable LLCs or charitable contribution plans, that we're talking about charitable remainder trusts. And sometimes a trust may be a good strategy, but they're very limited in what you can do, and you don't keep control of the asset the way you do with the LLC, and you lose liquidity in a lot of cases, especially like with the self-directed IRA, where it's almost like a separate entity. It is a separate entity from you, and you can't be restricted on the So this is a lot less restrictive, and instead of deferring the taxes, you're completely eliminating.
That's
So
amazing.
how do you get the money out, right? That's usually the next question. So okay, fine. So I sold my building. I had a $400,000 tax liability. So now I did not pay $400,000 in taxes. Only paid 1%. Where does that extra cash go? Well, the extra cash from the sale remains in the company checking account. Now, how do you pull it out? You take loans. Loans are tax free. And we recommend that you do actually contribute to that charity at some point, to show good faith, but you're not required to if you're not a charitable minded person. They have it on their statement. That endowment will eventually get paid at some point.
Mm-hmm.
But how? How will that eventually get paid? Well, that's where I come in with the insurance. You take out a huge life insurance policy, um, with thinking of inflation and thinking of how long before you actually may pass away if you're healthy for live a long life. And we finance that policy with a bank, a premium financing program. And then the charity will either get the life insurance proceeds or they'll get the asset when you pass away. This way you don't disinherit your family.
That's interesting stuff.
I mean, there's a lot of moving wheels to it. And if you talk to a CPA, they'll have 5 million questions. And, I partner with a CPA firm and an attorney who specializes in charitable contributions. You can't just do this with any attorney or any CPA. There's actually only 6 attorneys in the world that actually are able to do this strategy.
There's only what? 6 attorneys at what?
There's only 6 attorneys that practice this strategy in the world.
There's only 6 attorneys that use the strategy that you're talking about?
Our attorney right now is training a few people, or a few attorneys right now, because of his succession plan. He's pretty much retired. But when we bring a deal to him, as long as it's done and it's a qualified deal, he'll be lucky enough to be partner.
Interesting.
So sometimes that's not the right strategy. Sometimes you need to do a 1031 exchange. I'll give you an example. I'm probably about to sell a condo that I have in Staten Island pretty soon, and I don't know. I might have paid like 150,000 for it maybe 10 years ago or something. The comps in that area is like 250, 300. So if I sell this thing, I'm going to pay depreciation on, I don't know, maybe 150,000. So tax on that, plus I'll pay a capital gain of, depending on what I sell it for, right? So that's not as big of a tax liability as something that we're talking about to do this strategy. So I might just do a 1031 exchange, kick the can down the road, and then buy another 3-4 family, do it again. And then when the liability is really big, then I'll turn around and do this. I could also throw it into this strategy for some of the properties that I hold, because you can do the same thing and not have to pay taxes on your rental income.
So would you sell that condo to the person who's living in it?
I could. I don't think she would be able to buy it right now.
Are they paying rent right now?
Yeah, I mean, I use government programs. I have 100% my rent.
Got it.
In New York, it's pretty cool. They have programs besides Section 8 that they actually pay you the whole year up front, and you get a $4,500 bonus when you move them in for using the program, and the broker gets 15% of the whole year. It's a nice little rental, and nice for the landlord. But I always preach downside protection. You want to have at least 50-75% of your portfolio with Section 8 or programs, so that this way, if you run into something like this, you don't have to worry about getting your rent money. And if I do rent to somebody who doesn't have a program, I make sure that not only do they have assets, they have enough savings to pay. They also have disability insurance, so that this way, if they get sick or hurt, they can still pay their rent. And if not, I'm taking the guy on Section 8 because I know I'm going to get paid. You know?
So you prefer a Section 8 tenant over somebody who's not Section 8?
Yes, I do, depending on the situation. If it's a middle-class person who has a moderate amount of savings and no assets, then yes. If it's a doctor or somebody who moves from place to place over a few years here and there, and they have assets they could show, then of course I would rent to them. You get more money renting to a doctor than you will to somebody Section 8, but I'm not greedy. I just want to make sure that I secure my bag, I secure it for my family. And downside protection is something that I always talk about. I never talk about anything else. I don't talk about the stock market, making money with real estate. I talk about keeping the money that you make. That's why we talk about tax planning. That's why we talk about downside protection. So with a plan like this, it's not necessarily for everybody, but what you can do is you can create a foundation for yourself. So when you're at that point in your career, regardless of what your income is right now, whether you're an entrepreneur or you're somebody who doesn't have any assets at all right now, you could start a plan and become the bank by creating your own pension plan using life insurance. And it's very simple how to do it.
Right.
So you're really good at interviewing me. You're asking a lot of good questions.
I appreciate that. Well, this isn't really something. This isn't my realm, so I don't really know too much about the 1031 exchange. I know that people get whacked with the taxes and everything else.
Right.
My concern is that you coming on and you explaining the benefits of the 1031 exchange, what you're offering, what your services are, and my mistake in the beginning that you're a broker, and I'm assuming as a broker you have access to, I guess, we're working with different insurance companies.
Right. I mean, I work with every insurance company just about. I mean, there's a difference between somebody who has open architecture and somebody who's a captive agent. So if they work for a particular company, the only products and services they can offer are the products and services of that company. If you work for, I'm not going to say names of life insurance companies, but let's use banks as an example. If you work for Santander, and Chase has a really good business account program right now where you get a bonus for signing on. Santander's not going to say, hey, Chase has a better business for checking accounts. Why don't you go over there and get the bonus? Because they can't. They're limited to what they have to offer. And every financial institution, as you know, different lenders offer different programs, and different life insurance companies offer different programs and are specialized in different spaces. I have partners who specialize in special needs planning. I have attorneys who I use to create special needs trusts, and then I have attorneys that I use to create regular trusts or life insurance trusts. I have CPAs who focus on real estate alone, and then I have certain CPAs that focus on W-2 employees, and just doing accounting. So everybody has a niche, and mine just happens to be the real estate space, helping people grow their assets using real estate and life insurance using the tax code, because Section 101A of the Internal Revenue Code won't allow the government to charge tax on the interest you earn on the inside of a permanent policy.
Mm-hmm.
What I'll do is I'll create a plan for an entrepreneur who doesn't have a 401k. Even if you have a 401k, they're very limited. You can only throw 19,000 a year into a qualified plan unless you get a SEP, and then you can do a little bit more. But even that will be limited. When you're using life insurance, you could use that as a catalyst to really create your own pension plan and become the bank. So I like to buy a piece of real estate, take rental income and funnel it through life insurance, pull it out tax-free if I need it, and if not, pull it out and buy another property.
Makes sense.
So it doesn't really matter where you are. You want to protect and guard, what it is that you're doing. If you're in real estate, even if you're doing short sales or you're doing what's subject to, and then you're fixing it up and you're renting it out, or even if you're flipping it, it doesn't really matter. You want to become the bank, and you could take that capital and you could put it into a permanent. It has to be designed the right way. Don't just go to any life insurance guy and say, hey, I want to buy a policy and I want to throw some money in it. It has to be designed with the minimum amount of death benefit and the maximum amount of cash value, so that this way when you put the money in, it's liquid. Otherwise, you'll get your money stuck in there and you won't be able to pull out enough to do what you want to do. So it has to be designed properly. And then it's guarded from Uncle Sam,
That's great.
And even if you can't afford to throw a couple $1,000s into a policy and save and create your own pension plan, you could set up a term policy like we were talking about on the other show, and you'll have all those great living benefits. So you're protecting the things that matter to you. You're making sure that if you get sick or you get hurt, you don't have to pull from your savings. You don't have to sell your property. You don't have to liquidate your assets. You could use that death benefit while you're alive to take care of the things you need to take care of. And later on, when you start making more money, you're acquiring more assets, you can convert that into a permanent plan like what I just described and create your own pension and then become the bank. And then from becoming the bank, be able to do these type of transactions when you're doing 1031 exchanges or alternatives and creating these LLCs and then not have to pay any tax. But you have to start somewhere. You can start for pennies by just creating a plan and doing it the right way.
So I've never heard anybody talk about 1031 exchange the way you do. Obviously, you sound very passionate about it. I know you practice it yourself. Besides, the 1031 exchange, what's going on right now as far as the COVID-19, where coronavirus, excuse me, where what happens if somebody can't pay their premiums right now on the insurance? I know we're talking about 1031 exchanges, but let's talk a little bit about the coronavirus.
And well, most companies are practicing something called exclusions. There's different types of insurance. They made it mandatory to be able to defer your payments right now for a little bit. So most companies are allowing you to defer those payments. If you have a temporary policy, like a term policy, typically if you don't pay the premium, you don't have insurance, right? But even homeowners policies and any type of insurance, they're allowing you to defer a little bit right now. Homeowners, you only get 6 to 12 months on it. So eventually that money is going to be due because you were insured within that time period. But if you have a permanent policy or designed the way that I was just describing, the actual cash value in the policy will pay the minimum amount of premium for you, and you won't even have to defer the payment because the cash value can just pay for it, or you could opt to defer it under the CARES Act and everything that's going on right now. But one of the companies that I'm working with a lot lately has a COVID-19 guarantee on the living benefit. That's huge.
And how does that work?
So basically, if you were to contract the virus, it's not a trigger. However, there's things that can happen to you from getting this virus. A lot of people are having stroke. You talked about strokes before. More people are having strokes. More people are having heart attacks. There's going to a coma if you can't do 2 out of the 6 daily activities of living. All of these things are triggers on these policies. You could actually use that trigger while you're alive and use the death benefit and pull cash out. They pay you cash. So you don't have to worry about they pay the hospital, they pay the financial institute. No, they pay you, and you do what you want with the money directly.
That's great. Let's talk a little bit about the insurance side. What you talk about for the death benefits, or not the death benefits. Because I never knew that when you have insurance, when you have life insurance, that to have insurance in place if God forbid something happens and you don't die, and you're in a wheelchair and you can't work. Tell people a little bit about the insurance program that you talked to me about last week, and
Okay, so
how it varies.
Critical illness. There are policies that exist for long-term care and for disability insurance, but having a disability policy and having a long-term care policy and having a life insurance policy and having a health insurance policy, it's a lot of premium. So what I've learned to do is to consolidate and use a life insurance policy, attach the appropriate riders so that this way, in case of a critical sickness or injury, you could actually pull from the death benefit and use it while you're alive. Are you able to pull up the triggers? I sent you the COVID-19 guarantee and the triggers. You know how to use this thing yet?
No.
No, I saw you doing something. Here, let me see. Screen share.
Well, because I didn't screen share, that's why.
Yeah, so can't you do screen share and pull up the email with the attachment?
Shit. You there? Hello? Did we lose you again? Antonio, you there? Come on back, fella. Wi-Fi's not loving you tonight.
I'm connected directly in, man.
I think if I hit the share screen, I think you could actually show your stuff.
I try to do it.
Is that you or me? Did you see that or not?
I see screen sharing tips. Do you see it?
Yeah, if I hit the screen share.
All right, we should figure that out before we go live. But basically, how about this? I'll give you guys some of the triggers so that this way, obviously, most insurance companies on permanent policies offer terminal illness rider, right? Because if you're terminally ill, you're gonna die anyway. So they're like, all right, give the guy the money. He's about to die in 12 to 24 months, depending on what company. Everybody has different guidelines, but that's very common. What's uncommon and what you're asking about is the chronic illness riders, where if you can't do 2 out of the 6 daily activities of living, they'll allow you to pull from the death benefit. And we can do up to $1.5 million on that. And I've paid claims as close to 1.2 million. And a guy who had a heart attack and lived, and he called us up. Actually, his wife called us up and said, "Hey, remember you told me about those living benefits? My husband just had a heart attack. He's fine. He survived. But can we make a claim?" And the answer was yes. And they had a check for $1.2 million in 5 days.
How's that even? I don't get that. How's that even possible? Why are most people not understanding how this insurance works?
Well, there's very limited companies that offer these type of benefits on term policies. There's maybe 9 of them that offer a good lineup of them on permanent policies, and permanent insurance is very expensive. And most people in the real estate space, at least, they think that, you know, I'm going to buy another building, I'm going to do this, I'm going to do that, and I'm going to have X amount of money, and I don't need insurance. I've even had real estate investors tell me, Antonio, I'm too rich to buy insurance. Like, really? You're too rich to buy insurance? God forbid something happens to you and you can't manage your portfolio. You're not going to have any pool of money. You're going to have to liquidate your assets. You know, the whole point is to protect the things that matter most to you. Protect your family. Make sure your income is protected. That's your biggest asset. Make sure your rental income is protected. Make sure that, you know, if you have a little money in the bank, you want to make sure that you don't have to take it out if you got sick or you got hurt. You know, if you're a potato and you can't go and make money, that's your most valuable asset at this point. So you want to make sure that that's protected. So I found a way, and there's one or two companies that offer these benefits on term. And with that, it made it a lot more affordable, and you're able to use those while you're live. Let's say you got diagnosed with cancer, or I had a cancer claim a few months ago, right before this whole thing happened. The guy, he had a polyp, and it became cancerous. He had it removed. It was only stage 1, so we thought, oh, we're not going to pay a claim. It's only stage 1. They removed it. They offered him 100 grand. He took 50. I think I told you about that last time we were talking. And they reduced his $1 million policy to 800,000 because he only had the policy for a few years. So they reduced the face amount and they gave him cash.
Why do you only take 50,000?
Because he figured he's only going to be out of work for a few months. He didn't want to. He's not insurable. He has cancer, so he couldn't buy more insurance. And the reason he had $1 million policy was because he had a mortgage and he had things that he was protecting for his family in case he passed away. So if you recover, that doesn't mean that it's not going to come back. It doesn't mean that you still don't, at this point now, all right, beat death. No, you're eventually going to die anyway. So he wanted to make sure that he kept some insurance for his family. Like the guy with the 1.2 million. He didn't even cash out the whole thing. He took most of it. Though. He took 1.2 million. He left his kids 300,000. He said, "This is for you guys, and now I'm taking a vacation." And he had a good time. He was a city worker. He was never very affluent. Never had any money in his life. Now he's walking around with him. Oh, by the way, it's tax free because it's life insurance. So there's no taxes, even if it's a benefit. If it's a claim, there's no taxes. If you pull money out of the cash value, there's no taxes.
So what happened?
Non-taxable.
What happened that he actually was able to tap into it? He just had a heart attack?
He had a heart attack. He had a heart attack and he survived. No?
People have heart attacks and they survive.
Yeah, of course. People have strokes. There's a stroke every 40 seconds. Probably
how long?
Every 40 seconds there's a stroke.
Wow.
And now with COVID, there's probably a stroke. It's probably even worse than that now. ALS, Lou Gehrig's disease, blindness. If you go blind, you can make a claim. That's a critical illness. That's a critical injury. Fibromyalgia, renal failure, heart valve replacement, sudden cardiac arrest. And here are 4 things that are super unique: coma, paralysis, severe burns, and traumatic brain injury. There's only one company that covers those. And how do you get it on this term policy?
How do you access it if you're in a coma?
Your beneficiary. That's a good one. How do that? Oh, that's really good for first responders. Firemen, policemen. I wrote a policy for a firefighter recently, and I thought the biggest value add for him with this type of policy was the fact that it had severe burns. And he goes, Antonio, I'm not going to get burned. I got full gear on when I go into these buildings. It's cancer because all the carcinogens and the crap I breathe in. So a lot of firemen get diagnosed with cancer. So the fact that it covered cancer and he could pull from that death benefit while he was alive was important.
What's the probability if you're a firefighter you're going to get cancer?
I don't know the statistic, but he knew it better than me. He started spitting them out to me. I was like, wow, this is crazy. You got to do live and talk about this to your brotherhood, because he knew the statistics. He did his research before he had the conversation with me.
I feel like firefighters, policemen, especially, when they're out there in the streets, fighting for what's right and making sure building burning buildings don't fall on people. I mean, Christ, they should be taken care of. Not to say that anybody else that's in the street, that's any less important, but I mean, you're a fireman, you're going into a fucking burning building. You're a police officer, you're wearing a bulletproof vest because you're going to go out in the street, God forbid, you don't know if you're going to take a bullet that night.
Right.
So does the police, let me ask this question. Does law enforcement or fire department, do they offer similar benefits to what you guys offer?
That's a great question, and the answer is no, they don't. But one of the companies that I do work with has now associated themselves with National Association of Firemen or whatever. There was this big event in AC a few months before everything started going apeshit, and they offered it on a voluntary basis. They're not putting it in like the police officers 457 plans and things like that. Although I do work with a company called Protection Blue, and they focus specifically on first responders and police officers, and they are actually allowed in the municipalities in New Jersey. So if I was to make that connection between somebody higher up in any police or organization, he could get in the municipalities. He could actually get that to them and allow it to be offered. That's all he does. But I offer it on a voluntary basis unless I do some work with him.
Why do you think that people in general don't have any type of life insurance policy? What's the main reason why they don't have it?
I think most people just don't know why they need it.
The what?
They don't know why they need it. Everybody's Superman. Everybody's going to live for a long time. Everybody's going to be healthy. And we want to live for a long time. We want to be very healthy. But the fact is that eventually we're going to die. And that, I hate talking about the death benefit. I hate talking about product, but, the strategy, it's financial engineering. Like on the email that I sent you. You move money from one pocket and you put it in the other pocket. And there's benefits that you can get and also have a death benefit. So if I put a plan together for you because you wanted to save money on taxes, let's say you did a whole bunch of flips, right? There's a plan we could do called 412E3. It's another part of the tax code where we take a lump sum of money and we put some into an annuity contract or we put some money into a life contract, and then you'll get maybe a 50% deduction past what your CPA was able to give you. So that's good for people who are like flippers or people who have a large gain, but they can't afford the attorney fees on the other type of strategy that I just spoke about. So if I put that plan together, this person's not coming to me because they want death benefit. They're coming to me because they want the tax advantage, right? But the way I design the policy, they're also going to get the death benefit. They're also going to get the living benefits because as I design it as a full plan and not just for that one thing that they're coming to. And I think a lot of agents and a lot of financial advisors focus specifically on selling and getting, making sure that they don't piss anybody off and that they're professional and that they don't, break balls. They know what they're supposed to offer people, but they don't. They want to go for the low-hanging fruit. They want to make the easy sale. I don't give a fuck if I sell you a policy or not. I know 100% that I did the right thing by offering you a full plan and educating you on how you can protect yourself and your family the right way and by financially engineering. And if you don't see the value in that, then go work with a captive agent or work with somebody that is a family member and buy a shit policy. And I wish you the best. But I'm always going to be here to educate you and to tell you the right way to do it.
That was the other thing too. So what if somebody doesn't know the correct policy or the right policy to be in, and they're worried somebody stating to them or telling them that whatever the policy they're offering them, is the right policy. Like you're saying, what you're saying is the right policy. Somebody might disagree with what you're saying as far as the policy. Like it seems like everybody's out there, basically putting a spin on what they offer as far as policies. The one thing I could say right off the bat is you're not tied to one place. You're a broker. So you could actually find a better policy for somebody that if they were to go to, ABC, insurance or XYZ insurance or, GFY insurance or whatever it is. And then you could basically put them in the best policy for them based on maybe where their life is at, can the policies be changed 5
Right.
years, 10 years in?
Now we're having a good conversation because you said a couple of key things. Number one, people can put a spin on it to make you feel like it's the right thing for you, right? So I've come across a lot of advisors who are doing self-directed IRAs, right? And they use the term infinite banking. So you can fund this policy and then you can pull money out. You can use it to buy real estate. But these people don't know nothing about real estate. These people don't own any real estate. They have no idea what the needs really are of that real estate entrepreneur. So that's my niche. So I'm designing the policy as if I was going to use it for whatever your goals are. So that's a great point. At the point in your life that you're at, it's not just about being a broker. There's lots of brokers out there. There's lots of people who even work for multi-level marketing companies and say they're I'm a living benefits specialist. And do you know this? Do you know that? And they educate people, which is good, but they don't know the difference between the three companies that they're comparing. They only know one very well because that's all they sell, and they really couldn't be objective. They don't know how to design a policy for XYZ company to have the max amount of cash value and compare it to this company so that this way, if you're creating a pension for somebody who's involved with real estate, it works out the same way as somebody who's a doctor, because a doctor is going to have a more consistent flow, whereas a real estate entrepreneur is going to need to dump cash in as they make it, and you have to design those policies different. They have no idea. So that was a great point that you made. It has nothing to do with what people tell you. It has to do with what you feel. When you have a conversation with somebody and you connect with them and you say, you know what, this person not only has my best interest at heart, but I feel like they could really help me achieve my goal. If you don't think I can help you achieve your goal, why would you work with me? You know what I mean? Different stages of life. That was a good point too.
So I think that based on what you're saying, what you're offering might not make sense, and I'm just spitballing, for somebody that doesn't have a family. Like when we had our first boy, we ended up getting insurance because, God forbid, something happened to us.
What kind of insurance?
Life
insurance.
Yeah, God forbid something happens, but nobody talked to us about what you're talking about.
Should have. So that's the point. The person who was selling you their life policy only sold life insurance. I sell disability insurance. I sell long-term care insurance. I sell health insurance. Whatever it is, it has to fit what your needs are to help you achieve your goals. Right. I did a plan recently for an attorney. She does very well for herself. The reason that we did a policy was for the tax advantages. She had no interest in the death benefit. She had no interest in even the living benefits because she had a full long-term care policy. She had a disability policy she bought years ago, and she was paying pennies for it because she kept it going. So her main interest was the tax advantages. How can I pay less money in taxes? Show me something I don't know. And attorneys and CPAs love to have that kind of conversation and say, show me something I don't know, because they have to be the smartest guy in the room. So if you can't have a conversation with somebody and teach them something or give them some information that they didn't know already, or even if you know it, implementing it's totally different, right? Oh, I heard about that. But have you ever executed? A lot of people are a member of the Good Idea Club. Oh, it's a good idea. I'll do that one day. But one day it may never come.
What about somebody that is between jobs right now? What if they have to go on disability or they're on disability? Okay. Can somebody on disability take advantage of the programs that you're offering?
It depends. If they have a disability that disqualifies them from purchasing other types of insurance, then obviously they can't. But there's other things they could do. It depends on what the goal is. Sometimes people are just getting close to their retirement and they don't need life insurance. They need a place where they can put money and have a fixed interest rate, and they want to take distributions and they want to live on that money. They want a lifetime income stream. In that case, I might use an annuity, or I might use a life policy. If they're healthy and they qualify for it, I might use it to dump in some cash and then take a lifetime income benefit rider, and they could take money for the rest of their life and never run out of money. Well, it depends. There's no one-size-fits-all strategy to financial planning. No matter who tells you, I don't care what guru or financial advisor or whoever the hell you're watching or what their books or their tapes. There's no one size fits all. Everybody's playing field different.
Okay. So this is the question, and I know I brought this up to you before. I know the answer, but there are people that are watching that are questioning, well, what if I do get insurance? Maybe I do exactly what he says, but 4 months from now, God forbid I get hurt. I've only paid 4 months on my policy. Am I protected?
The answer is yes if you were honest when you filled out the application. So if you lie on any insurance application, there's a 2-year contestability period. I think we talked about this before as well. If you lie, they have the right to contest it if there's any red flags, and they can rescind the policy. And what they'll do in that case, I just had that happen actually recently, and I had to give somebody back their premium for the last year and a half or whatever it was because they lied, and I couldn't do nothing about it because they weren't transparent with me. I didn't lie. I gave them the information the person gave me. So I spend some time typically in the beginning building a relationship with the person and getting a little bit deeper.
Anybody who's going to watch this on a replay or listen to it is going to say, you had to give them back a year and a half worth of policy because they lied. What the hell did they lie about?
Oh, health. I never had cancer. I didn't have my father died of unknown sources and he died of cancer. I never had a surgery. Meanwhile, you had your leg removed. Because we do easy underwriting in a lot of cases, especially right now with the whole COVID thing. So I'm pushing through policies without any medical underwriting, without any fluids, without blood, without urine. Unless you have an existing history and there's a red flag, then we can get a medical going.
Well, what if you don't know? What if you don't know you have something?
That's different. Then you're covered. That's the point of insurance, is transferring risk to a larger entity. So you're taking the risk of something happening and transferring it to, a larger company. So that when something happens, you don't deplete your own funds. You got the insurance money. Then you get into a car accident, right? And you only have liability, and the person is suing you, and you have assets. What happens? You wind up having to pay them. If you don't have any assets, then the person beat, and whatever your coverage is the maximum amount that you can get. But the point is, you're transferring that risk. And it's illegal not to have certain types of insurance, right? Because you could hurt other people. It's not illegal not to have disability or life insurance or these type of policies because it builds wealth. This is how you build wealth. You don't build wealth by making money. You build wealth by protecting the money maker. You could make a lot of money, but if you can't keep any of it, what's the point? I had a CPA who got into a car accident, didn't have the right auto insurance. There was a rider he should have had. He had a gap. He had to pay $100,000 out. Luckily, he had the money. He could pay it. But if not, what do you do? You're going to have to sell something. You're going to have to deplete your savings. Make sure you have the right policy in place. Don't just take what your job gives you. Don't just take what your uncle sells because he's an insurance agent. Don't just take what I'm telling you. Do the research and make sure that it's the right plan for you.
So again, people in general obviously are very suspect of people that sell insurance because they're worried that they're going to get roped into a policy that they're not going to understand. Based on what you're saying and the fact that you have accessibility to go into different insurance carriers and offer different programs, and the fact that you can tweak it. Like one of the things here that I wrote down is household expenses, and I think I put it up on there: adult care, home modifications, regular bills, nursing home care, quality of life expenditures. Let's talk about, God forbid something happens and the person who has a policy needs somebody to take care of them for somebody for daycare. Are these policies structured that if God forbid something happens and they need 24-hour care, 7 days a week, are they paying it?
So there's not these policies, right? Because there's not one particular product or one particular strategy, right? When it comes to these type of planning, right? There are policies that will cover long-term care. and the things that you're talking about. Now, long-term care policies are extremely expensive. Okay, 20, 30 years ago, they were more affordable. And if you have it from that long ago, I would never tell you to get rid of it because it's a great thing to have. But a guy like me or you, a little bit younger, and we look at that premium, we're like, oh, I'm not going to pay 30 grand. I'm not going to pay this premium right now just in case something. I'm trying to build my empire. I want to grow my assets. I'm in the accumulation phase of my life. I don't want to spend all this money on premium just in case for when I'm old, right?
Mm-hmm.
That's the logic that we tell ourselves. So that's a huge problem in the financial planning world right now, whether you're an insurance agent or a financial advisor, and you're helping people plan for their future with their retirement. They don't want to pay the premium for the long-term care, even though they know that they need it. I sat with a gentleman last year who said to me, this stood out in my mind. He said to me, I've been working with my financial advisor for 30 years, Antonio. I know I need long-term care. You're not going to sell me long-term care. I said, that's crazy. So how long into the relationship did your financial advisor in this 30-year period offer long-term care to you, shop different companies, or give you different solutions? And he said, never gave me a different solution. Just kept, every year when we do our review, he keeps telling me I need to buy long-term care. And I said, okay, so what happened every year? He goes, the prices kept getting more expensive. So now you're in a place where you worked with the guy for 30 years and he hasn't been able to come up with a solution for your problem and you're still working with him? That doesn't make sense to me. So I don't want to step on anybody's toes. I like to work with other advisors, other agents, and fill the gaps in the plan that they can't figure out. That's what I do. So in a case like this, in what me and you were talking about, and the type of policy I was recommending was because there's a certain rider that we could put that you were just talking about that acts as long-term. And that's a free rider that you can get on a life insurance policy. And it goes up to 1.5 million. So you get paid cash, you use it for whatever you want. So yes, you can have somebody in your house. I wish I would have had that when my dad was diagnosed with cancer. That's actually how I learned all of this stuff, finding out what insurance pays for and what it doesn't pay for. When I put him in a nursing home, it cost me 8-9 grand a month.
Well, that's what I was going to ask you. So what happens in a situation like that where somebody has a policy that you recommend based on, shouldn't even be based on age. God forbid something happens. So you never really know. So now you're paying into it. A year down the road, God forbid, somebody's, for all practical terms, a vegetable. They can't live at home. They have to go into a facility. Is the facility going to drain all that money for that life policy? How does that work?
The facility will basically make you take all your assets if you let them. You know, I was young and I thought I had to pay, and I didn't realize that I really wasn't on the hook. My dad was on the hook. I didn't realize that. I didn't realize it, so I just paid. But if you're not the person, you're not on the hook, right? So you got to separate yourself.
How long did you pay before you realized?
Well, he wound up passing away a few months into it, so it wasn't that long. But regardless, it was financially draining, and it was so frustrating to go there and to see how they would. I felt how they were treating him, and I'm paying this money, and this is how he's being treated. And he asked for extra something, or he asked for extra pain med or oxygen or whatever little thing he wanted that day, and they would come to me and say, that's not covered. And I'm like, what do you mean it's not covered? Well, it's not covered. You have to pay out of your pocket. Like, okay, what am I going to do? He's, to me, going back to that, that place in my life, it was very, you don't want to worry about money at that time. When you're going through losing a loved one and they're in a really bad place, you don't want to worry about having to do a GoFundMe page. You don't want to have to worry about depleting your assets. You want to make sure that you have something in place so that you can take care of them the best way you can, especially the way that everything is going today. So we use a lot of time, we use trusts and LLCs and different entities so that this way, separate the person from the money in case they needed to make a claim and things like that. It's strategy. That's why I kept saying it's nothing to do with product. You can have the shittiest products, but if you use the right strategy, you'll be in a better place. If you do both together and have the appropriate products and the best strategy, then you'll be in a good place.
I'm obviously always concerned with the people that tune in and listen to what I have to say. This was something that made sense based on a fleeting conversation we had. Sorry that we had some technical difficulties, but I would say anybody that tunes in at a later time and watches this on the replay, I mean, I would definitely reach out to Antonio direct. This is his direct number. You can reach out to him. You can ask him any questions that they have. Does anybody have any questions? We've got about 5 minutes left. And if you don't want to answer questions now, that's okay, because I know sometimes this is a touchy subject, and not everybody wants to talk about it. Stella Lamberg had said that she thought this was great content. So that was nice for her to say. There's an issue with Facebook where, if you notice, they put some of the things that people said, for whatever reason, they won't allow the people's names to be on there. There's actually something that they actually have to go on the bottom of these links when they come on, and click on it and say, yeah, I approve having my name show up. It's ridiculous. So,
well, you know what? If you're watching this on the replay, write #replay, and if I see that, I will. I'll message you, and you can get a copy of the living benefit lineup that you should be looking for in every life insurance policy. I'll send you a digital copy of it. Certain things that you should be looking for to make sure that you have a full plan. And if you're a real estate entrepreneur, most of the time, real estate entrepreneurs don't fail because they don't make enough money. They fail because they didn't have a full plan in place. And I have a program called the exposure rating, where I can actually gauge your the percentage or the chances that you're going to actually make it as a real estate entrepreneur based on your financial game plan.
Interesting. Very interesting.
So I can do that with you guys for free. I also do free budgeting right now with COVID-19, budgeting and helping people put a foundation together. A lot of the time, people think they can't reach out or they can't talk to me because they don't have a lot of money at this point. And they're like, oh, when I get some money, I'm going to go talk to Antonio. But it doesn't need to be when you get some money. I think everybody should have a COVID-19 guarantee, critical illness policy right now. And it should be a convertible policy into another type of plan that you're going to need later on in your life.
Right.
Reach out if you want to learn how you can do that.
Listen, at the end of the day, there's nothing wrong with at least getting a checkup to see what maybe something that you might offer that maybe their regular insurance guy wouldn't have offered, or if there's something that maybe you offer that maybe wasn't thought about or considered, that they should definitely take a look at, or have a different
do a review too. I'll work with your insurance agent if you want. You show me the plan that he put together for you, and I'll show him how he can make sure that it has the appropriate riders and that it's a full plan. And if there's something that he can't offer, I'll appoint them to my company. I'll let them sell it to you. How about that? I don't care. My thing is building relationships. That's why I like working with you, because people before profit. That's the important thing for me, because I don't do this listen, it's my business, right? But my real estate pays for my life. So anything that I take or anything that I earn doing the business I'm in, I put it back into real estate. So I'm not out here trying to close a policy. I'm out here attempting to educate you guys, and hopefully in the future, when you're doing really well, we'll have some nice things that we can do together and that I can teach you. And there's nothing wrong with learning now. You put a plan in place today for pennies that can expand and can grow into something huge when you have your real estate empire. That's the game plan.
Look, at the end of the day, the reason for the night show is to dive in a little bit deeper for people that really want to come on and discuss something that they're offering. I think this is a great opportunity for somebody who has a family that may or may not have the correct policy, or maybe they might need additional insurance, or maybe they need to understand a little bit more about the living aspect of it. If God forbid something happens and you have to go into a nursing home, or if you need the money to bring someone in.
Talking about, yes, it's great for families, but planning is for everybody. I don't care if you're 22 years old. I have clients that are 22 years old that buy and sell real estate, and they don't give a shit about the insurance. They care about the tax plan. But if you don't protect your income, and something happens to you, you got to start all over. Did you ever have to start over, Matt? I've had to start over several times in my life, and it sucked, you know? And I wanted to put myself in a place where I would never have to start over.
That's a great
And
point.
if you transfer the risk, you don't have to.
That's a great point. So if somebody loses their job, this can benefit them too?
Absolutely. Listen, especially with all the guarantees and everything that's going on today, I've done policies for pennies for people recently because they don't have income coming in. They're like, I need these benefits. What can I do? So we put together something. If you got some money in the bank and it's just sitting there, right? And something happens to you, that money's gonna go bye-bye, right? So why not take some of that money, put it into a plan that's gonna give you a bigger bucket of money. So if something happens, you can pull from that and keep the little bit that you have left in the bank. Financial engineering. You have a 401k plan and you have credit cards, right? A lot of advisors say, look, take the money from your 401k, pay off the credit cards, you'll save some money on the interest, right? Great. Now what do you do with those extra premium payments? Put them into a permanent policy, pull them out tax-free. It's just financial engineering. You got to move money from here to there so it's more effective, more efficient. Financial engineering, anybody can do it regardless of your income, but you got to educate yourself now and learn today so that you can grow that plan later on.
Yeah, so Stella Lambert asked this question. The objective of weight loss. If they want
That's a
to
great one.
wait, before buying a policy. Stella, I'm gonna let him answer that question, but I think that you should reach out and talk to Antonio regardless, because him and I actually had that discussion about the insurance. So answer that question for him.
It's funny that she asked that. When I was in a different field, when I was purchasing my first policy, I waited because I was trying to get my weight down. I was like 60 pounds heavy. And I wanted to get my weight down because I wanted to get the best policy. I wanted to get a permanent policy. I didn't want, anything that was good. I wanted a permanent policy, leave a legacy for my kids, and cover my mortgages at the time so that this way my wife had income. So I had a game plan. I did my homework, and I was on a weight loss program. I went to the doctor. He told me how many calories. I was exercising, and it took me like 6 months to get where I needed to go. And then I was a year older when I got the policy, and it was a totally different price. And I was like, what the hell? I kind of learned from that there's different companies that will give you a rating today, and you can get re-rated later. What would have happened if I waited that 6 months and something would have happened to me? In the meantime, I wouldn't have been insurable. So you got to get something now. So my suggestion would be, and I don't know what your financial playing field looks like or your architecture, but what I can say is get something in place now and then convert it later to what you want. Get re-rated. Get what you can get now, even if it's something small, and grow it later. Because if you don't get it now, you may never get it. I've actually been doing a plan for somebody who's getting a disability policy, a life policy, and I was putting health insurance, like a whole plan together for them, and they got hurt on their job. And now they didn't qualify for the disability portion anymore. I was still able to get them, their life insurance, but it had an exclusion for the riders because they just got hurt. So I couldn't get them. All I could get them was death benefit. And that was in the middle of the person making a good decision to take a plan. So I would never wait. Do it now.
Stella, if I were you, I would call Antonio direct on that number or text him and at least find out what your options are. You don't have to come on. You don't have to talk about, did you do it? Did you not do it? He's not going to say to me, hey, that woman that I spoke with, she took whatever policy. That's all confidential. There's all additional information that I'm offering at night. I don't have to do these things at night. I don't have to do the lives that I do at 12 o'clock in the afternoon. But I got to tell you, people need to snap out of this COVID-19 bullshit because life's going to go on regardless. And if you have a job, thank God, and you're working from your home, mazel tov. If you have a job and you have to go in and you're furloughed or whatever it is, you got to power through it. We're going to get through this. This isn't going to, look, Are things going to change? Are things going to become the new normal? 100%. But that doesn't mean that, you're paralyzed and do nothing. So, and the majority of people don't have a lot of money, in retirement or in savings or living paycheck to paycheck. So God forbid you do get hurt and you don't have the additional money and you can't pay your rent or you can't pay your mortgage, am I going to convert or am I going to change or am I going to add to my policy? I don't have a choice. I have kids, I've got a ton of people in my house. I got a fucking tribe in here. I got my mother, my mother-in-law. I got 2 kids, a wife, 3 dogs. It's like fucking Noah's Ark over here. So for me, I have to think, differently now that I have my mom and my mother-in-law. Because, I do work a lot, and I'm not the epitome of health. So if God forbid something happens to me, I got to make sure these guys are okay. So I think what Antonio's offering, I think
you got to care more about the people around you than yourself. And that's typically what most insurance agents play on is protect what matters most. Your family, your family, your family. I'm not going to do that. I'm going to tell you because you know your family, you know your situation. But I'm going to show you the benefits while you're alive, what you can use these strategies for. It's there's no such thing as most financial planners just sell stocks. Okay, that's the God's honest truth is they sell mutual funds, they sell securities, and they're not even doing it themselves. Most of them are just, management companies, and they're just, earning a commission to put you in. Oh, this is good, that's good. Stop trying to catch falling knives. You protected things. If you want to create a good strategy, use real estate and insurance. You'll build a lot of wealth.
100%.
You gotta learn how to do it. You gotta do it from now. You can't wait. You gotta get started. Don't be a member of the Good Idea Club.
I like that. That's a great title for a book. People will definitely read it, and then at the end of it go, "That's a great idea," and do nothing. That would be it. They would read it and shelf it. But these guys, they read these books, and then they put the books behind them. I know guys, they stack books behind them, and it makes it seem like they read it. And I go, "Did you read any of those fucking books?" And they go, "No, it just makes me look smart." It's like, whatever, man. Just go get a green screen and put a whole thing in a library behind you. As far as books, it's all about smoke and mirrors. Listen, Tony, I love having you on today. I know in the beginning I was a little docile and I really wasn't getting involved because, quite honestly, I don't really know enough about the 1031 exchange, and I thought you were doing an amazing job explaining it. But as far as the 1031,
well, you know what? I have an attorney that I'm bringing on my page at careers, and I'll drop the link in the comments.
Yeah.
We haven't set a specific date, but all this guy does is 1031 exchanges, and I'm going to bring him on my live, and I'm going to interview him so that this way anybody who doesn't really know much about 1031 exchanges can learn a little bit. That's all this guy does. So
drop your link, put your phone number in there. I mean, your number's here. Put your phone number in there. If there's anybody who's watching or watched, people popping in and out, which is great. The beauty of having this is a replay that people can watch it. I'm not taking it down. I'm going to leave it. The night shows Tuesdays and Thursdays are on Short Sale 101 only. I'm not putting this on my regular pages. This is about, adding extra value and bringing to people's lives. And I know people are going to say to me, is this related to insurance? This is related to your fucking life. This is related to insurance in your life. So everything that we talk about, obviously within good reason, makes sense. And if you see the value in this, share it. Don't share it. Call the phone number. Private message, Antonio directly. I mean, he is the protection specialist for a reason. I love it. And I appreciate having you having come on and offer the information. This guy's already doing a finger point. So at the end of every show, I ask, people that come on if they can do the point. I don't know what the hell you're doing, bro. It's like you got a gun at me right now. It's like that. You gotta get a different light. See how much brighter it is over here? Yeah, you live in light. You got like a hospital room light in your office. I don't know what the hell that is. Guys,
The
thanks so much
lighting.
for tuning in. I really appreciate it. Antonio is the protection specialist. You can reach out to him directly at 347-722-5656.
The Hebrew Hammer infomercial for the protection specialist, ladies and gentlemen. Antonio Frattalone, the protection specialist. Protect the management.
347-722-5656. Thanks so much for coming on. I really appreciate it.
You got it, man. Talk to you soon.
Take care. Bye-bye.